In yesterday's class, we'll discuss the conversion method. Okay, under that conversion method is convert the single entry system into the double entry system. Okay, so in this conversion steps, there are missing figures are given. We find out that missing figures and we'll prepare the trading account, profit and loss account and balance sheet. So under that step 1 is what? Statement of affairs as relating to the capital. Okay, next step 2 is preparation of cash book. Okay, on that cash book, on the debit side is cash collection from debtors, cash sales, income from investments, sale proceeds of assets. Next, on the credit side is total payment to creditors. Okay, on that credit side, any payments were made to the outsiders or any creditors, expenses paid, payment for purchase of assets, payment for purchase of assets, drawings by the proprietor. If in case in that cash book, in the shortage of debit means, it means what? Credit side is more, debit side is less. For that balancing figure is an a cash sales or capital introduced or sundry income. The next is if debit is more, credit side is less, means shortage on the credit side of cash column. Credit side of cash column represents the cash purchases, drawings, cash purchases, drawings or sundry expenses. Next step 3 is preparation of total debtors account, total creditors account, bills receivable account, bills payable account, total sales account and total purchase account. So that the preparation of these accounts will help for find out the different missing information regarding the opening and closing of debtors balance, opening and closing of debtors balances, opening and closing creditors balance, creditors purchases, credit purchases and credit sales. Now see the step 4. Step 4 is complete the statement of affairs. Complete the statement of affairs with the available information, with the available information, so that the balance of statement of affairs represents the opening capital. The balance of the statement of statement of affairs represents the balance of statement of affairs represents the opening capital. It represents the opening capital. Next is step 5. Step 5 is pass the appropriate opening entry in the journal. Okay. Next is pass the appropriate entry in the journal in respect of the assets and liabilities included in the above statement of affairs. In respect of assets and liabilities included in the above statement of affairs. Next is step 6. Step 6 is write up the real and nominal accounts from the information contained in the cash book and other accounts. Every account should be carefully scanned. Every account should be carefully scanned, and the double entry effect of every transaction must be given, passing corresponding debit and credit entry in appropriate ledger accounts. Debit and credit entry in appropriate ledger accounts which should be opened if necessary. Okay, so step 6 is write up real and nominal accounts. Write up the real and nominal accounts. Real and nominal accounts from the information contained in the cash book. The information contained in cash book. Okay, next is step 7. Step 7 is balance of the accounts. Balance of the accounts and prepare the balance of the accounts and prepare the trial balance and prepare the trial balance in the usual manner. Trial balance in the usual manner. Okay, next is step 7 is we'll find out the closing balances. Okay, that is balance carried down like that. That's are called as a closing balances. So that is balance of the accounts, balance of the accounts and prepare the trial balance in the usual manner. The next is after trial balance preparing, the next step is what? Preparing the trading account, profit and loss account and balance sheet. Step 8. From the trial balance, prepare trading account, prepare trading prepare trading profit and loss account, prepare trading profit and loss account and balance sheet. Okay, from the trial balance, prepare the trading account, profit and loss account and balance sheet. In examinations, students skip the 5, 6, 7. Okay, we have to leave the 5, 6, 7 and directly prepare the trading profit and loss account and balance sheet for saving time. Next is as of we already know the what trading account pro forma, profit and loss account pro forma and balance sheet pro forma. Okay, that all are studied in first sem under final accounts now. So once you go through that trading account, profit and loss account and balance sheet, now write the pro formas of total debtors account. Now write down the pro formas as total debtors account, total debtors account, total creditors account, bills receivable account, bills payable account. Total debtors account. Particulars amount, particulars amount, particulars amount. Okay, and that for first debtors is a asset. Okay, assets are started with an opening balance. That opening balance are a debit side. So that is to balance brought down, to balance brought down opening. Next is on the debit side to credit sales, to credit sales, Next is to total creditors account. Total creditors account. Total creditors account. The next is by cash or bank. By cash or bank. So by cash or bank is amount received from debtors. Amount received from debtors. Next is bills received. By bills received. By bills received. By discount allowed. By discount allowed. By bad debts. Next is by balance carried down closing. Okay, by balance carried down closing. Next is total creditors account. Total creditors account. Particulars. Amount. Particulars. Okay, so here creditors are liability na, so that liabilities are starts with the credit balances. By balance brought down. By balance brought down is opening. Next is by credit purchases. By credit purchases. Next is to cash or bank. To cash or bank, this is amount paid to creditors. Okay, on the debit side is to cash or bank, that is amount paid to creditors. Amount paid to creditors. Next is to bills payable. Here on the debtors is bills receivable. On the creditors is bills payable, that will come under the debit side is to bills payable. To bills payable accepted. Next is to discount received. To discount received. To discount received. Next is to purchase returns. Here will getting purchases. On that opposite side it will getting purchase returns. To purchase returns. To purchase returns. Next is here by total debtors account. By total debtors account. To balance carried on. To balance carried down is closing. Okay. The next pro forma is bills receivable account, bills payable account. Next is bills receivable account. Bills receivable account. Bills receivable account. Particulars amount. Particulars amount. Particulars amount. Okay, so on that debit side is to balance brought down. To balance brought down. To balance brought down opening. To balance brought down opening. By cash or bank. By cash or bank, that is bills receivable honored. That is bills receivable honored. Next is by total debtors. By total debtors is total debtors is bills receivable dishonored. Bills receivable dishonored. Next is by total creditors account. by total creditors account, that is bills receivable endorsed to creditors. Next is to total debtors, bills received from the bills receivable received from debtors, bills received from debtors, received from debtors. To total debtors, bills receivable received from debtors. Okay, so we will close this account by balance carried down. Next is bills payable account. Bills payable account. Particulars, amount, particulars, amount. Particulars, amount, particulars, amount. By balance brought down. So here bills payable is an liability, bills receivable is an asset. Asset starts with an A, opening balances is debit side, and this bills payable is a liability. That liabilities are opening balances of this credit side. So that by balance brought down, opening. Next is to cash our bank. To cash our bank, bills payable honored. Bills payable honored. To cash our bank, bills payable honored. Next is to total creditors account. To total creditors account. Next is here is bills payable dishonored. Bills payable dishonored. Here is by total creditors. By total creditors is bills payable accepted. Bills payable accepted. Next is to balance carried down. To balance carried down. Okay, these are the proformas of bills receivable account, bills payable account, total debtors account, and total creditors account. Okay, now we'll see short problem. Okay, now I'll see the short example problem. Ascertainment of credit purchases when bills payable information is not given. Okay, now see this example. Paid to creditors. Paid to creditors. Cash is 60,000. Paid to creditors. Cash is 60,000. By check is 42,000. Okay, in the form of paid to creditors, cash is 60,000. By check is 42,000. Purchase returns 5,000. Discount received 3,000. Due to creditors at the beginning of the year is 40,000. Okay, due to the creditors at the beginning of the year is 40,000 and at the end of the year is 56,000. Okay, I will prepare the total creditors account. Okay, so creditors is from this total creditors we'll ascertain the credit purchases. Remember this. Okay, from this total creditors account we'll find out the credit purchases. So total creditors is an liability. That liabilities are starts from the credit side. By balance brought down, opening is 40,000. By balance brought down, see here, due to creditors at the beginning of the year is 40,000. That is by balance brought down, opening is 40,000. Next is paid to creditors. That paid to creditors will come under the debit side. So in the form of to cash account is 60,000. To the bank account is 42,000. Next is purchase returns account is 5,000. Discount received account is 3,000. Next is at the end of the year 56,000 beginning. So the here creditors are beginning and closing balances are here. So for we write for the beginning is brought down. For the beginning is brought down. For the closing is at the end of the year, at the closing is carried down. So here closing balances is given. So that is to balance carried down, closing balance is 56,000. Now we'll find out the purchases account, that is credit purchases, that is balancing figure. Means total of the debit side is total of the debit side is 1,66,000 minus total of credit is 40,000. So that 1,66,000 minus 40,000 is 1,26,000. This is it. From the total creditors account, we'll ascertain the credit purchases. Next is from the bills payable account, we'll find out the balance carried down amount. The next is now see here ascertain credit sales from the following. Ascertain Credit sales from the following is debtors opening is 40,000. Debtors opening is 40,000. Closing is 56,000. Received from debtors is 60,000 in cash and rupees 80,000 by checks. Next is goods returned by customers. Goods returned by customer is 10,000. Discount allowed to customers. Discount allowed to customers is rupees 8,000. Discount allowed to customers is rupees 8,000. Next is bad debts. Bad debts is rupees 6,000. Next is provision for bad debts. Provision for bad debts is rupees 5,000. Next is interest charged on debtors is rupees 2,000. Okay, from these debtors we will calculate the credit sales. Okay, total debtors account. We know the pro forma. Okay, these are the debit and these are the credit. So on the debit side is to balance opening balances is 40,000, interest is 2,000, sales is 1,78,000, by cash is 60,000, by cash is 60,000, by bank is 80,000. By sales return account is 10,000. By sales return account is 10,000. Next is by discount allowed. By discount allowed account is 8,000. By bad debts account is 6,000. By balance write down, that is closing balance is 56,000. We do the total.